What I would say is that a lot of retail traders do most of their trading here, where you and I are not trading, right? This is where bigger money is doing their trading. And I like to let them work it out, right? Work it out amongst yourselves. I don't have time for that shit. Starting to see some longs look like they're taking profit up here. So market starting to look a little bit weak. Um, uh, excuse me. And so what happens is they get in here and then, it either goes their direction or it doesn't go their direction because they're getting in just in the mean, right? Kind of like, this is probably, if you buy this lot here, like if you wait, and I'm just saying this as a generalization, not necessarily today, but if you were to buy this 90 and let's just say you just put your take profit at 92, probably decent 50% chance that it goes up there, right? Could just trade through and keep going. But this is kind of the area where it's just chop, 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 chop. And that's what happens is most retail traders get in here long, 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 long. Let's just say, for instance, long, 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 long. And then a big initiated seller comes in, sells the market down. Well, all of these guys are just forced to liquidate because they're smaller term traders, right? They've got their stop like either close by or at the bottom of F, and then boom, they just get smacked in. Yeah. So I mean, I would say it's a combination of trapping retail traders and a misunderstanding of the of kind of what's going on, right? And that's why I think sometimes, like, if we look at a 5-minute chart, it can be so confusing because you're like, where depends how zoomed in they are, right? If you're looking at a 5-minute chart and you're like this, you're like, okay, higher lows, this thing didn't make a higher high, but it's coming back down to this previous high, so that should be support, right? But then when we look at it, a little bit more zoomed out, we're like, oh shit, should we be being patient and maybe looking to sell from up here since we're in this downtrend? Or are we drawing this, this downtrend line, and if we break above it, we're going to be looking to trade into that seller, right? It's I mean, it's just such a nuancing and such an obscure thing, I guess. Not really a not really like an exact definition. It's just not how it works. Still says fucking pirate traders. I don't know how to change it. Stream should be back on now. I don't know what happened to it earlier. Volume in that last period in F period was about 5% less than yesterday. So as we got down towards those lows, volume was about 5% less. Big sell order on the 98.75, 166 lots. We're starting to get above it. Too far above that 98.75 is going to cause some short covering. Target will be the prior day low and then the settle. Yeah, especially auto. If you're on the NASDAQ too, that thing just kind of sometimes whips around until it starts to just go. 101 or 100 lot order on the 4101 quarter. Look at that. This is what I'm talking about. I was seeing this all day yesterday. Check this out. So here's the time in sales. Here's this 100 lot order, right? And then covered here. They bought 100 lots at 1 quarter and sold them all at 2 for 3 ticks. This was happening yesterday. And it just makes sense with how mechanical the past 2 days, really, inside balance been mechanical like almost constantly, but it makes sense. You start to get some of these big buyers. It looks like some volume's coming in. You're like, oh shit, there's a buyer, and then two ticks go up, and then he just covers his trade. The breadth is starting to get a little bit less negative, still pretty negative, and you're starting to see the tick even climb above that zero line a little bit, and you're starting to see the weighted sectors start to try to climb above their zero line as well, and we're starting to look more close to how we looked at the open, right, with our mixed bag of inventory. Still, that advanced decline negative 1400, not really doing good. That just tells us that our big names are holding us up. Look at the market watch: Microsoft, Apple, Google, or not Apple, Microsoft, Google, Facebook, Tesla, really kind of propping us up today. And that just tells us too that the selling in basically every other equity is just not very strong. Big offer moving down to the 0150. The Nasdaq's trying to do a little backfilling here as a weak spot in volume. Offer moves down, 99 quarter, 200 lots. They're trying to smother the price again. See if they can get it going. That selling kind of looks mechanical, right? It looks like they're selling that FI almost. But it is right at the VWAP as well, too. So too much below this, probably liquidate, or you'll probably start to see some longs liquidate back down to that 90 level, that 40.90. Look to see if buyers are going to hold the open or not. It's just on my other screen. I don't put it on there just so it doesn't get in the way. On Bitcoin I do. I was talking about the daily view up on here. I'll be right back, guys. All right, I'm back. Meta scales back the AR glasses. Now you're seeing that bid step up on the 98.75, 300 lots. Oh, there's a little battle here. Look at that. They're really fighting over this 4100 level here. And who's gonna be the champion? Now broke FI. It's sort of the egg queue. There we go. There's a nice little stop run for us. Let's see if they can keep going. So impulse is from the 4103 here. Look to see if they can hold the market above the 4103. That'll show us that buyers are willing to initiate prices above the open, and that's what we've been waiting for. There's the previous day's low. Do you think liquidity runs are more likely to happen in small caps than in large caps because the low volume makes it easier to move price and larger orders are less profitable to fill in low liquidity? Um, to be honest, I'm not sure. I don't really know about that. I mean, I think there's probably like a multitude of factors. It's based off of how much inventory the market maker has, right? So if they've got to get rid of a bunch of inventory, then they'll just start selling the market. Um, but if they're short a bunch of positions and they need to buy some shares, then they'll just start, you know, finding those big bids that are up to the top. I think that's, most likely what causes a lot of those um, liquidity runs. Oh my God. BG's just getting the smackarooski. So we're seeing these sellers right on the 105, just selling the previous day's low naturally. Mechanical. Breath is picking up here, back down to 3-1 on the NYSE and 1.5-1 on the Nasdaq. Tesla's trying to get back to its open. Apple's still down about 1%, but really found some support off that put wall at 146, where everyone's selling puts. Still about $1, actually still about half a dollar below their open. Amazon as well is still below its open, kind of lagging behind. I guess it's right on its open, right above its open. So stuff is starting to kind of flip, and if we pull this over, you can kind of see a little bit more green is starting to pop up throughout. Look at Home Depot started to flip. Got ABGO, couple consumer staples starting to get some green. Verizon, AT&T, right? So there's some green starting to come into the market. Not to say that not to say that to get long right now. At this point you're a bit late, but yeah, so here's how I look at that though, boy. This is the way that I think about it, or the way that I interpret it, right? So imagine if you're the market maker, the dealers, right? The sell side of the market. So if I'm a buyer in the market maker's the seller. If I'm a seller in the market maker's a buyer, right? Well, they've got to do this dance to try to keep themselves um you know what even, right? To keep themselves from getting overly one side. Well, sometimes what happens is, you know, you get retail sellers just boom, 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 selling, 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 selling. Well, these buyers get too long, the sell side of the market. I mean, I say sell side, but I'm just the opposite side of your trade, right? Um, but if you're all these retail traders are selling, 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 well, this market maker is just absorbing because they have a set number of contracts probably that they need to bring it back to balance, right? And so the selling stops, and then what do they start doing? They just start, slowly grinding it back up, and then they look for those pockets of volume. The tricky thing is, especially in the ES, even though spoofing is against the rules, you do get a lot of people that will come down and put a fat bid right here, and then you can see like we'll try to go get it, can't get it, and then they'll just pull it real quick, and then they'll stick it up here. Market will go up, and then they'll pull it real quick, and then market fades back down. Right? The market is attracted to liquidity. It just has to. I mean, it really just depends on where the inventory's at the current time. And that's why I like to track these T2 levels, right? The 2 days ago's level, because settlement is 48 hours. I mean, I heard they're switching it to 24, but I haven't really seen any other information about it yet. But where you figure people got too short up here and then it came down. Well, they bought this dip, so there's still probably people long from this day, right? We didn't take out that previous day's low, and the people that held overnight, this is where their stop is at. I'm certain we could not get down to it. So what is that telling us? One, telling us that there's not much supply down here, so no one's really willing to sell it. And two, probably inside here around the Globex low, we got some responsive buying from the same people that have been buying it this past 2 days, right? Um, I mean, if we were to kind of combine this, we would just see like a triple distribution profile. This one and this one, we would just see a triple distribution profile with a bunch of mechanical references all over the board. Just telling us how short term these traders are. But we're looking to track the actual inventory against these short-term traders, and if we can identify where short-term traders get a little bit too long or a little bit too short, that's when you can start pushing in these reversion to mean trades that you see, Jim Dalton talking about a lot. He's a fairly big fan of that. That's most of the time that's most of the time what he's looking for. He's looking for inventory to get too short or too long and then trade against it, or to see where uh I mean, that's pretty much what he does, right? Like, market gets too short, he buys some calls, and then he just monitors for continuation the whole time. The same idea. He just uses options, so it's just a little bit different, but the same in principles. So we're coming right back down to that prior day's low. Like I said, when we get up here, we're looking to see if the uh, profile, or we're looking to see if this TPO is going to get accepted back inside the previous day's range, right? If we keep trading below the previous day's low, that's pretty much telling us, okay, probably not. NQ starting to get a little bit of love here. If this thing starts to run up to the top, we could start to see it take some of these other things. I've got my eyes on Apple pretty tightly to see if Apple can break above the open. If Apple can get back above its open, and it's about 50 cents shy of that, you could start to see some shorts cover, especially in that bigger name like that. We could get some more upside. Right, double I. The second way that you said it, so you should I say, can the market get too short because of too many orders on one side, causing the dealer's books to need to rebalance? That's kind of how I look at it, and that's the way that Jim explains it. Better than I do, I'm sure, but um, that's that's what he is keying in on and what he's looking for. Oh, we're gonna have a guest appearance next week. Let's go. James is gonna be getting into the Zoom. Who's pumped? I know I am. Get our panda back in the action. Where's the sleepy panda awakens? Yes, yes. Where's our man H? Is H period? Our man H in the chat. Supposed to be letting us know if H is gonna be up or down. So they're defending this low fairly well. We're starting to see volume move up and starting to defend this low. So, you know, if we keep getting this upside, keep getting these buyers showing up, eventually someone's going to have to give up, right? We know that the sellers are mechanical today on both sides, with maybe a little bit of responsive buying below us, and that's telling us that eventually one of them is going to have to, you know, call it a day and pack up shop because they've ran out of inventory to sell. You know what I mean? You show up to the flea market with only, you know, 1,000 TVs and you sell them all for $4,100, and you know, you're trying to buy them back later maybe for less, but nobody else is selling TVs. Well, the price of those are going to be going up because there's a more of a rare commodity, right? Supply and demand. Man, the myth, the legend. Oh, Tyler, what's up, man? You say chop suey? This is where your aggressive models take the cake, but that should end soon. Typically, when I am making this much money in the tight range like this, my auto profit transfer kicks in and they start to hunt. What is it, a bot, Tyler? Oh, Jared. Ah, sometimes you just make me want to cry. It's a static grid. It just takes profit aggressively, but if we break the range fast, no pullbacks, I end up stuck with the position on one side. Oh, okay, I see. Yeah, so you're just like scalping the edges. That makes sense. When we do internal stocks, make ES or NQ move around when do internal stocks make ES or NQ move around, and when is it the other way around? What do you mean, Otto? I'm kind of confused. Like when do the stocks um um touche. Um I'm just kind of confused, like what stocks make a move, or okay, so when Apple and Microsoft make the ES, when they're all moving in conjunction, right? So when they're all moving together, they have that kind of power. So today we can see we've got Apple down 1%, Amazon down almost 1%, but Tesla, Google, Microsoft, and I mean Facebook's basically flat, but they're all green. So we've kind of got like 3 out of the 5. Netflix I haven't really been paying much attention to, but you can see Netflix down here down 3%. But so if they're all moving together, that could be enough to move the market. And the Nasdaq is very tech heavy, right? So if you look at the Nasdaq, the top 100 stocks, it's very tech heavy. If we take a peek at the market watch, we look at this Nasdaq 100, we can see the big sectors in here: Microsoft, Apple, Nvidia. Like these are the stocks that if you're trading the Nasdaq, that you need to be paying attention to, right? Um, and then they have, you know, they have their sectors as well, but you can see the weight difference, right? The weight is heavily in the tech sector. So if Microsoft, Apple, Amazon, Tesla, Google, Facebook are all doing green, it doesn't really matter if the rest of these things are red, the Nasdaq can still turn up, right? And that's kind of what we're seeing a little bit of today, right? When we look at the breadth, we had a 7-to-1 negative breadth and a 3-to-1 negative breadth on the Nasdaq, but the market really didn't go uh, much lower. ES and NQ don't move the stocks. So the stocks are comprised of, or the ES is basically like an ETF, right? It includes all 500 of those stocks. So this is moving based off of a percentage of how all of those big stocks are moving. Yeah, that seems intense. What's ATAS, Michael? Afraid to upgrade on ATAS? Is it a platform? Oh yeah, trading platform. You should get you know, I liked what was that one? Did you take the scalp short? Oh no. Oh, you're from Tyler. I didn't short. Brad, can I get your take on the perspective of the overall market sentiment at this time? Yeah, for sure. So basically, and let me pull over just like the daily chart so we can look at it here. For me, what I'm thinking, at least for the ES, right, on a on a bigger perspective, what I'm kind of looking at, right, we're making lower lows, um, but I'm kind of seeing this failure for sellers to move back down, right? I think that sellers are probably still here, very mechanical level high, previous month's range high. Um, and it also happens to be kind of, the top that we're looking for. It looks like shorts are covering right here, guys. So be careful if you're in a short below this 4101. But so my perspective is I think there's still more pain ahead. I just think that it's going to cause with how much selling has been kind of trying in this area, it's going to cause a event that's going to be needed to break this low, right? And to get more continuation to the downside. With the PMI tomorrow, I think that might be the ticket that might be able to come down in here. And that, like I said, brings us back down to like that 3,800 range. It really opens up the floor. If there isn't any support down here again, especially as we get into, like I said, these daily single prints, if there isn't buyers stepping up to buy that, we probably trade uh, back down to that 39, and then like I said, that 3,800 seems like the target for them. The report, at least for me, seems a bit like we don't really know the follow through. So we're going to get PMI, and let's say that interest hasn't peaked, or let's say that inflation hasn't peaked, and it gets higher next week. Um, let's say it gets higher, right? And then that causes the Fed to ease up. So we get scared because inflation is still on, but now the Fed's not going to tighten as much. And so that gives us like, okay, well, and then it just keeps us in limbo. And really, like I said, I don't see a lot of the fear subsiding. I mean, even though the VIX is down today about 24, um, it's at 24, it's about 24%. The, I don't really see any stabilization until the conflict in Europe is over, right? Or until the US decides to stop giving stuff to Europe, right? That would help the US economy. It would probably uh hurt some relationships, I'm sure, but it H takes that G low. Oh, hi, Brad. Where do you see that question about perspective and the markets? Didn't see it in Discord. That's in the Zoom. Yeah, so the Zoom, basically I have a Zoom like for our founding members, and so it's just like it's not like an open thing. Um, could I check out gold on a higher time frame? Yeah, let me check it out. I was actually looking at gold yesterday. So here we go, I period opening up. Want to look at gold. Let's look at it on the daily. Yeah, there is a Zoom. I read the questions all out loud and stuff, so that way everyone gets the same idea. The Zoom just basically just gives them the ability to articulate their questions with words instead of text, because sometimes it's hard to communicate in text. My goal here, literally since the beginning, is to get everybody to the point of at first becomes that break-even trader. That's my goal, is to get everybody to that point of being able to obtain that, that mystery of us, that financial freedom. Starting to test that low here. Let's see what they got. Yeah, no problem, Michael. How I saw the shorts covering just from that market profile. When you're talking about earlier, I've sent Midnight a couple of messages actually. Not for a while though, to be honest, but uh back when he was first getting that job, and he was just so busy. So I'm not sure how he's doing at all. But that's a good idea. I should reach out to him and see what's the deal. Oh no, no, I said it. I said earlier. I said it. It looked like some longs were. Oh, you're talking about back when we were up at like 4101. Yeah. Yeah, he did have some crazy knowledge. The reason I think that this is shorts, yeah, I see what you mean. So the reason I think that this is shorts covering down here, or it was a little bit of shorts covering, is because of how it bounces off of that low, right? So we see this huge volume cluster here, right? And this period just tracks the last 30 minutes of trading. So we have this huge volume cluster here, and 500 contracts on the low. There definitely could be some selling, but most likely if this was selling, we wouldn't have popped back up above it. So they start to cover, it pops back up, and then these sellers that are selling the open, right? This is pretty mechanical high, are given the opportunity to move down. And as we move back down into that same spot where shorts covered last time, what we look for is to see if they're going to sell below it, right? So below this level. So they're back at it, they're selling it. And we want to see them sell below it. That's what's going to be able to get that opportunity for more downside. There it is. And so now what we're looking for at the lows is we're looking for an initiated seller to move down and start selling below where our TPOs start to dwindle off, right? So we start to get into this 3-4 area here, 2-1, right? We want to see if there's going to be continuation to the downside. We're going to have to see some selling below that level, right? And we really, to get downside, there's going to have to be a seller that comes down below 85 to start selling. And we just haven't really seen that today yet. We're seeing a lot of selling on the 85, but
See? And then that's what happens. These poor bastards, they just won't sell down there, and then it just happens. So just now, the selling below 87ish. How do you know it's not longs closing? Just by so the way that I know is because I've watched this about 100,000 hours of time, probably, right? I put in a lot of chart time, a lot, like a fucking lot. And I watched this little triangle here, and based off of how it acts at certain levels, and based off of the volume response that I get in these areas, that's how I know. So that's how I know that that's not just longs closing there, that that's shorts closing, short covering, right? They covered first at that 87, and then they covered again at 86. That's why we only got 6 contracts on the low tick, and we already came back up where? To the volume point of control, the magnet. This is where all the business is done. This is the most fair price of the day, right? So this is where everyone's saying, okay, this TV is $4,090. That's what it is at Amazon. That's what it is at Walmart. That's what it is at Target. That's what I'm going to pay for it, right? It comes down here, and now it's $4,085. And if you're a seller, you're like, well, shit, if I sell my TV on Amazon, I could sell it for 4,000. Why don't I just do that? Well, there's nobody buying it up there yet, so you're gonna have to wait. You can list it, but you're gonna have to wait if you want to sell it. Are you willing to wait? Becomes the key. And then there it goes. Boom. Back to psychology. The most important thing in trading is psychology. Just fucking hammer it, hammer it, hammer it. Let's get back to gold. My bad, Double R. I'm texting Jared and he's fucking pissing me off. And so I'm having trouble concentrating. So gold long term, let's see. Look at the monthly. So we can see on a monthly level, we are one time framing down, still sitting within the previous month's range, but we are making consistent lower highs and consistent lower lows. Interesting, on the monthly level, we have a fairly close low. So we just peaked below this low and then rebounded, right? So there's where those buy stops were at, below this structure on the monthly basis. So let's zoom into the weekly now. We can see the weekly is still one time framing to the upside. So we're getting some contradicting information. Same as the ES, right? On the day, on the monthly, we're one time framing down. On the daily, we're or on the weekly, we're one time framing up on the ES, right? Same idea here. I mean, it just looks like it's balancing higher on a weekly, balancing up here, but it still looks like a P formation on a weekly, and there still could be some more downside. Um, the thing is with gold, it's so gold tends to do this, right? Like you can see how tight this range is, and then it makes a big range, comes back, gets tight, and then makes a big range. And that's why, gold can punish people pretty bad sometimes. I mean, you can see, look how tight it is down here, and then boom, it started. 2020 started to get all this volatility, but it still gets back to those tight ranges. And gold's kind of, I don't want to say manipulated, because I don't know for sure, but gold is um, gold is reliant or correlated with a lot of other things, right? Like oil, correlated with the dollar and some other foreign currencies as well. So it's there's just a lot long term that would go into gold, and I just don't have enough I guess, like, I don't have enough research into it to trade it, right? There's people like futures traders that are just gold traders, and those are the kind of things that they're deep involved into, like oil inventories and dollar liquidity, and all kinds of stuff like that. Kevin. Let me get to your question. Kevin says, I think it's going to be worse than the Great Depression. In the Great Depression, there was no intentional distribution or disruption of the supply chain. In fact, this was the first time in history that we have a recession and a supply chain breakdown. That's why I think that there can't be any pain relieved until these supply issues get fixed. During the Great Depression, countries still traded food and essential supplies. Gold is about the same price now as it was when crypto started 13 years ago. Oh, okay. Yeah. I agree with that. Like, I think that if gold starts to go way up, the market's probably coming down. Do you think that sometimes knowing a big picture of the world market conditions can sometimes damage psychology of an intraday trader? It can if you let it, right? But that's why we write down our plan every day, because I mean, I think so too. Like, if you're looking at the market on a bigger level, like we're just saying, down, right? Downside. But because we're intraday traders, not every day is going to be a downside day. And then that's just where the patience comes in. So like if you look at a market like this, right? So if we're looking, there's my mouse. So we look at this, right? And we're thinking like, okay, lower highs. Well, if I want to get short, where do I want to get short from? Probably right here, 4,200, right? That's where the 50-day moving average is at. Let me just short that, right? That looks like a good spot, but what do I got to do? I got to wait. Do I have the patience to wait until we get up there to catch a short, to trade all the way back down to balance, to catch a 100-point trade? That's not on, that's on everyone else individually, whether they're willing to do that or not. You know what I mean? Instead of aggressive new shorts, I'll totally bounced up from 87. If I don't look at the order flow, well, typically this is order flow. Or technically this is order flow, right? It's just someone deemed the thing order flow, but literally orders flowing through. This is the exact same thing. It's volume. I just don't have it in bid and ask, right? If I were to go like, oops, not like that, like this, click on my studies, and then just change my volume profile. Instead of showing me total volume, I could show ask volume by bid volume. Then I could see, the delta, or you could look at it any way that you want. It doesn't necessarily matter. It's still order flow. Yeah, you could look at a footprint chart. It's still order flow. All right, guys, it's 10:40. Damn, it's already 10:50. I am going to go catch a workout, and then we are heading down to the Bay Area to have some dinner. Let's go over the market real quick. Okay, so basically, like I've been talking about all day, I kind of have our no box at 40.97 to 41.0175. This is an area that we're not really looking to get short if we're above it, and we're not really looking to get long if we're below it, right? We like to see the market at least establish in this spot or get above and start trading higher. Like we saw in H period, right? I period breaks down. We're starting to break down to the lows. We still have decent excess on the low. We haven't seen any size seller move down. Remember, the key number is 85. We need to see selling below 85 if they want to take the low. If they do take that low, first target can be that T2 low, that 77.75, and then we have a cluster of previous lows and highs at this low range of balance. If we do break into this balance low, remember that we're going to be wanting to apply balance rules. First thing we do when we're applying balance rules is monitor for continuation. So by doing that, we have to
try to identify the impulse and try to identify where that seller is at. So once we're able to do that, we want to see if the market's able to hold below that seller and if that seller is willing to keep moving down to sell to get that continuation. We can also look to see if we are getting buy stops in this area as well, right? If you're short, you've got your buy stops down here, your take profits just waiting to get hit. And a lot of times that can cause a big reaction because it's basically taking these positions out of the market. So you had all these sellers in the market, they're out, right? It's not necessarily saying that the buy's gonna or the bounce is gonna last, but if they don't re-offer or sell again, then they're not going to be in the way for the market to go higher. To the upside, we still have a decent amount of mechanical references. First one being the I high right at the open, the C high right at the settle, and then yesterday H high right at that G half back, and one more. Where is it? The G high is right at the 6-3 high. This one I'm not putting a ton of weight on just because it's just that's where G opened, and sometimes time is a little bit tricky, and so maybe that's where it is at. But this is where a liquidation happened, and so we can assume that from yesterday, just this real quick, we can assume from yesterday inventory got too long. Here's the liquidation. We can assume inside this area, H high is where shorts piled on. So if we get above 41.29, there's going to be short covering. And that short covering should take us back to where the liquidation started, which was at 42.50. Right? We know this 41.40 has been a big level. So if the market does climb up there and hold, that's where we'll start targeting this upside again, that poor high, prior day high at 41.60. Switching over to Bitcoin, right? We see Bitcoin is still just stuck in balance. It is starting to coil a little bit as we're starting to get price range tighter and tighter. We've got the weekly VWAP here, the monthly VWAP here. I'm not sure where the daily VWAP is on Bitcoin, but it's probably very close to here, I imagine. So we do have price being held below all of these VWAPs, a break above this 3,600, probably target some of these highs and get back above. We'd like to see Bitcoin establish above 3827 in order to get continuation to the upside, because this is the top or above a longer term daily balance that we've seen, right? So if we can get back up there and establish, then we start targeting some of these highs. If this isn't able to happen and we break back down into the lower range of balance below today's low, probably takes us back down to this 29,400, 29,200. 2,900 is a nice round number. The market will probably be looking to go for there. But we've definitely got to be careful, because even if the market does break down but doesn't break this excess low here, remember all of the previous value that's been established in this area. So it can act as support, and we don't want to get blindsided just assuming that because the market breaks below 29,000 that 22,000 is next. You know what I mean? We've always got to maintain perspective. But other than that, make sure that you guys have a wonderful day. Make sure that you are managing risk and sticking to your trade plan. And I will catch you guys all later.